But now let's get into the meat of all this, right? How are the mechanics behind DeFi and crypto lending? How are they operating, and what is some of the infrastructure behind it? So how does crypto lending work, and how is it different from traditional finance?
Yeah, I think to start, I think let me explain TradFi and TradFi like margin lending. So if you go onto E-Trade and you have, let's say, $100,000 worth of Apple stock, you can take out a loan against that Apple stock up to a certain percentage, right?
Yeah.
I'm not sure exactly what it is on E-Trade, but let's just say 80%.
Yeah.
So $100,000 worth of Apple stock, you don't want to sell it, you don't want to pay taxes, so E-Trade will let you take up to $80,000 in a loan, and you're probably going to pay 13-14% as of today on that loan. And then what happens is if the price of Apple comes down and you're at that 80% mark, E-Trade isn't going to wait for you to pay back that loan. They're going to sell some of your stock at a discount and pay it back for you. They're going to effectively pay themselves back because they're the ones lending you the money, earning 13-14%.
To get it back below that 80%.
Exactly. To make sure that they always have a margin, a little gap that they feel safe in case the market crashes, right? So when it comes to crypto, it's actually very similar, except instead of Apple stock, you have Bitcoin, you have Ethereum, you have these massive asset classes that, again, there's so many people around the world holding, and they want to get access to stablecoins for spending, for example, and they don't want to sell their Bitcoin and have to pay taxes or their Ethereum. In a lot of cases, people are obviously very bullish. They've been holding on to Bitcoin for a while. You still need to pay for expenses day to day. And so taking a loan against your crypto has become an option for these people.